at this. So tell me what it means for markets.
Well, I think just to step back for a second, we've been talking a lot about the NASDAQ volatility being very elevated over the last few weeks. But if you step back and think about U.S. equity volatility, simply the VIX is at a premium to every other major equity market volatility. It's at a premium to Japanese equity volatility, European equity volatility, and emerging market equity volatility. And typically, the VIX is at a discount to those levels. In fact, it's at it's sort of in the bottom 1 or 2% of all those spread readings over the last few years. So, your prior guest was talking about, sort of outperformance in foreign markets over the next few years. Well, right now, the U.S. is an outperformer in implied volatility levels. And I think that comes down to two key factors, one of which is simply that, the big cap tech stocks, which you can really only find in the United States, have put in a massive rally. The NDX was up 35% year to date. It's the only major index to have that kind of outperformance. Many foreign indices are either up modestly or down on the year. So investors have been hedging into that rally, which is, I think, constructive. But of course, the other thing is what Kevin, your colleague Kevin, was just discussing, which is both there's a big if and when questions on fiscal stimulus, and that's bleeding into the VIX curve into Q4, and of course the election here right now. And I think one of the things that I've been watching is, there's various ways to measure the election risk premium in the VIX curve. Typically you might look at the October contract that captures November 3rd, that spread to November. And compared to any of the prior election years, I was looking at the data from, September 9th of 2016, 12, and 2008. By any metric, we are highly inflated right now. The question is why are we inflated in that premium? Is it because, a Democratic sweep, would pose, ugly market factors upon us? That could certainly be part of it. But I think there's another factor, which is simply that, we may have a contested election that might bleed on for a while. So I don't want to get too geeky here, at this hour here and without graphs. But if you look at the November contract less the September VIX contract, that premium has been, ever since early August, has been pushing a lot higher. And I think that really tells you the story that it bleeds into this this concept that we may have a contested election. And so I think investors have to face the fact that the election risk is kind of being redefined right now. It's not necessarily who wins and whether the Dems get the House and the Senate. It may be more about just this overall factor of we don't know who's president. That could go on for a while.